Yo, what's good, guys? Welcome to my YouTube channel. Today we'll be talking about the simplest and easiest way to identify market structure. Yeah, the simplest and easiest way to identify market structure. And I'm sure you guys already know what market structure is. Market structure is the simplest form of price movement in the markets. And we already know we have three types of market structure. We have the uptrend, the downtrend, and the side trend. So real quick, this is GBP AUD. I'll be showing you guys how you can identify market structure. One key thing to note, or one key things to identify while knowing how what the market structure is showing you, you need to look out for higher highs, higher lows, lower highs, and lower lows. And mind you, you use higher highs and higher lows to identify your uptrend, and you also use your lower highs and lower lows to identify your downtrend. So real quick, this is GBP AUD. Not to waste much of your time, I'll be doing the analysis on this real quick. So we already know from this area here, this is a consolidating market, also known as a side trend. Yeah, drawing in my rectangle. You can see the market consolidated for a while until this breakout happened around here, and it's safe to call this point here a low. This point is serving as a low in the market. Coming market out. Yup, this point here serves as a low, and after this force of this buy happened, after the whole breakout, the whole buy stopped at this area around 1.77411. So we can equally call this point a higher low. Mind you, don't forget what I said. Identifying your uptrends, you look for higher highs and higher lows. So at this point in time, since the whole market broke out from this consolidation, we should be expecting the market to form a higher low next, and which it actually did. The market formed a higher low around here. So after forming a higher low, the next thing you should look out for, like I said once again, once the market forms a higher high, check out for higher lows. After it forms a higher low, the next thing you should look out for is a higher high. So at this point in time, when you see higher highs and higher lows on your charts, it's safe to say the market is on an uptrend, because you can actually see it, the market forming higher highs, higher lows, higher highs, and another higher low at this point. This is one very easy way to check out for your higher lows and higher highs. So real quick, we already know here around here this market's consolidating because it's just moving from one point to another, same range, up down, up down, up down, until this breakout happened. So yeah, a way to identify your lower highs and lower lows, I'll be using this point again. Once again, a side trend happened around here where the market consolidated for a while. Yup, a little consolidation happened around here. You can see it, market move up down, and broke out here, but then still went up a bit. Once again, this point here serves as a low, clear, and you can also see the market broke out from this consolidation box, but then with just wicks. And mind you, wicks are also very important. Yeah, you shouldn't disregard our wicks while trading, because they are also very important. But then wicks just tend to tell you, okay, fine, the market touched out this area, but the sellers around that area were still very much strong. Regardless of that, after the market formed this high around here with the wicks, yeah, the market still, yeah, my bad, not there, over here. The market suddenly formed a higher low around there, indicating that this market is giving us a bullish vibes, yeah, or a bullish momentum. Regardless of that, the next thing we were meant to expect on this move around here was the market clearing out this previous high, but then it failed to happen, because if you check it out properly, the market consolidated again around this area and failed to break this high. And the next thing that happened eventually was the market forming a new low that's underneath this previous higher low, even underneath this one here, forming a low here. So the very moment you see the market breaking higher lows, forming lows, you should know the trend is about to change. But then if you want to get your confirmation perfectly, you should be expecting the market to form a lower high at this point here, which it did. You can see perfectly at this point here, and boom. Mind you, it's a very simple thing. Once the market forms a higher high, the next thing the market forms is a higher low. Likewise for lower highs and lower low. Once the market forms a lower low, the next thing the market forms is a lower high. So after a lower high, the next thing we were to expect was a lower low, which the market eventually did. And poops, we have another one out here. We're using this, and after this lower low, the next thing went to form was a lower high on this area here. So you can see it's like it's very easy to identify your market trends. All you have to look out for is your higher highs, higher lows, lower highs, lower lows. So using my path, seeing the market started here, went up here, created the higher high, higher low, failed to break this previous low, then she dropped down to form a lower low around here, and she went up again. Obviously after forming a lower low, the next thing to form is a lower high. She did that, came around here, lower low, lower high, lower low, lower high, another lower low, then a lower high again, then consolidation around this area, consolidation, consolidation, consolidation. So once again, it's quite easy. This is like the easiest and simplest way to get this in. You really don't need voodoo or any other thing. You just need to open your eyes, look at your charts, look at what the market is doing, then take your trades. And yeah, in a nutshell, once you see stocks like this, once you see the market is on a downtrend, obviously your point of entry should be around your lower highs instead of your lower low to reduce your risk and all of that. If you are seeing the market on a downtrend, it's best you look for a point of lower high and sell from there, because you know once it sells from a lower high, the next thing it's going to create is a lower low. Likewise, the same thing for your uptrend. You buy from your higher low, knowing that yes, after forming a higher low, the next thing is going to create is a lower low. I mean, check out this uptrend there on GBP AUD. The market formed another higher low around this point, and I'm setting in the coming in time, like in due time, this high will be taken out. But then don't forget, once again, the market is never wrong, the market is always right. So you move alongside the market structure, move alongside what the market is doing. Your analysis sometimes could be on point, but then you also just have to follow the market always at all times. I hope with this little thing, oh, crazy. I know I'm going to call this part out, but it is what it is, guys. If you are looking for sales, look out for lower highs, lower lows. If you are looking for buys, look out for higher highs and higher lows. And yeah, this is like the easiest and simplest way to identify your market structure. Well, do well to subscribe to my YouTube channel, like my posts, and share them in coming times. I'll be having more videos, more forex content for you guys. Thank you.